everybody. We are back from our Christmas and New Year holiday break. We are back to trading here on a Monday, January 6th. This is the first full week of trading. And on this show, we look at earnings on stocks. And we don't just talk about earnings, we talk about the estimated move of stocks and how to profit. And depending on what type of move we're looking at, whether we do one strategy versus another. So we're going to talk about estimated moves. So not just the date of the earnings announcement, but how much these stocks move on a certain date. Now, over the holiday, as we went into the holiday, we did a trade on Nike, and we actually used an exit technique that I haven't really talked much about on this show. So be sure to stay towards the end when I review Nike, because we did take profits on that trade, but we did exit it a little bit differently. And I'll show you why we did that before we get to this week's trade. So I have another trade alert for you. So be sure to stay tuned for that. Now, as we get back to trading this week, we only have about 26 earnings reports that I'm zeroed in on this week. That's not many, but these are some familiar names for us because we trade them often. Companies like Helen of Troy, Albertsons, Jeffries, KB Home, Wallgreens, Constellation Brands, and more. So be sure to stay tuned because here we go. Let's get it done. All right, as the graphic kind of comes up here, we're looking at how we break these down. If you remember, is on the left-hand side of this document are the breakout stocks. These are stocks that we believe are going to have big moves greater than 10%. All right. On the right-hand side are stocks that we believe are going to consolidate. What are consolidating stocks? They're stocks that move less than 10%, so single-digit moves. All right. So let's begin with taking a look at those single-digit move stocks. All right. If we zero in on them, this is what it looks like. Okay. Now, this is a trade from the past. This is a stock that we watch on a regular basis. This is Yum Brands. And I wanted to show you what a quiet stock looks like. And I've got the earnings announcement circled with the ellipses here. And you can see the stock just doesn't move very much. These are quiet stocks. For these types of expected moves, we do trades like iron condors, butterflies, condors, etc. Things where time premium is on our side and implied volatility, we are selling high premium. So let's take a look at this week's list here. We're going to start with just a few handfuls of stocks. You know, this week there's in total about, I believe it's 70 or 90, let's see here, 73 stocks that have earnings this week. We're focused on about 25, 26 of them. All right, so it is a quiet week, but coming up in, I believe starting next week, we start the next earnings cycle, and we have some big names coming up. So you'll want to come back next week. But let's get through this week first because there's plenty of trading opportunities. If we jump over to the chart, we're going to start with Cal-Maine Foods. This stock has earnings on Tuesday, January 7th, after market close. The expected move here, it seemed to have dropped off there, but that expected move is less than 6% on Cal-Maine Foods. You see today it's down 3.6%, so it's actually having a little bit of volatility here before its earnings date. But this stock on the earnings date should only move about a little less than 6%, so single-digit mover there. Then we have Albertsons, the grocer. Okay, they have earnings on Wednesday, January 8th, before market open. The expected move here is less than 2%. And you can see this stock. Look at it might look like there's some volatility with this stock, but look at the scaling on the right-hand side. This is a $19 stock, okay, trading at $19.66 right now. And if I consolidate my pricing down to where, let's just use $1 increments, you can see that this stock just really doesn't move. And it has on announcements, okay, like they were trying to do a merger. There may be things discussed about a merger. You'll get a little volatility here, but the earnings announcement has it less than 2% when it comes out. All right, Jeffries is the financial firm. All right, they have earnings on Wednesday, January 8th, after market close. The expected move here is less than 5%. Now, as you can see, this stock is in the financial sector. It's been on a big bull run. Okay. And it doesn't mean the run is over, but the move will shouldn't be big. Okay. It shouldn't be double digits. It'll be single digits like we usually expect. That's what the market makers are pricing in right now. We should see that move less than 5%, even though the stock is up today, 1.5%. KB Homes will have earnings on Wednesday, I believe it is. You can see my last note here back in September, less than 5%. Stock closed by 5.35%. So same thing here. You can see the stock is consolidating. Let me zoom in on that. Earnings on our Thursday, January 9th, after market close. The expected move, once again, is less than 5%. Now, I do like this consolidation pattern here, but not for the reason you might think. This is kind of something that usually leads into breakouts. But again, it could move 5%. Okay. It could gap up 5%, maybe drop 5%. We don't know, but the expected move is going to be about 5%. So the secret here is to set up your trades like your iron condor, your butterfly, where your break evens are beyond that number, maybe 7%, 10% if you can get it, that sort of thing. All right. So as we wind down the calm trades here, or the quiet trades, we got two more for you here. We have Constellation Brands. The stock is well off its highs today. This is a $225 stock. Look at that. Earnings are Friday, January 10th, before market open. And even though this is a $200 stock, you can see that this stock just is a pretty quiet mover. Okay. It just doesn't move very much. And through earnings, it doesn't move much either. We expect to move less than 5% on Constellation Brands as we move in towards the end of the week. And finally, as we close out the week, we have Delta Airlines. All right. The expected move is being consistent here at 7%. You can see the last time we had earnings, we had that same estimated move, less than 7%, and the stock moved 1.35% through earnings. Now, you can see that post-earnings, it did rally, and it's rallied actually very nicely. But we're just talking about going through that earnings date. Why? Because something called implied volatility gets rushed into the options, and literally in a snap of a finger, when those earnings come out, that IV crashes down, and that is how we make our profit on these types of trades. All right, so let's transition over now to our volatile stocks. These are the fun ones to watch. Our list here is well, relatively. There's a few stocks I want to note, but as we go through this list, be sure to like and subscribe. If you like looking at these stocks, you'll want to come back each and every week and how we look at these stocks and how we have been trading these. We've been very successful. All right. So we have a chapter feature that will help you guide you through these to get to the stock or the name of the company that you like. And you can listen to what I have to say about it here. So we're going to begin here on this list. Really on Wednesday is when things get heated up for these stocks that break out. Although a couple of these I like to keep an eye on, SLP, APOG, if I can get a trade. But really the stocks that are consistent for us, we begin with Greenbrier companies that if we come over to the chart, we can, let's see here, get all that blue off there. There we go. They have earnings on Wednesday, January 8th, after market close. The expected move here is about 14%. And you can see that this stock around earnings, boy, look at this gap and these big moves that Greenbrier likes to have. So we're expecting a move greater than 14% through earnings. All right, Helen of Troy is next here. Helen of Troy has earnings on Wednesday, January 8th, before market open. And again, this stock is a potential big mover with an expected move greater than 15%. And you can see last time this big gap that this stock has, that's earnings right there. And this stock has been consolidating down here around the $60 level for several days. So we could see a big breakout on Wednesday before market open. All right, these types of trades are good for straddles and strangles. All right, And those are nice simple trades where you're just buying call, buying put. A straddle is that you do that at the same strike price. The strangle is a call at one strike price, a put at a different strike price, but with the same expiration on both of these. So that's Helen of Troy. Then we have Franklin Covey, and I like the price action here. This consolidation as it goes into the earnings event with an expected move greater than 12%. And you can see around the last earnings cycle, man, look at some of the volatility there. Let's see here. I don't recall what that event was, but I don't think that was earnings. I think earnings was back here in September for Franklin Covey. But the move is greater than 12% is the expected move. And then finally, we have Walgreens Boots Alliance. So WBA is the symbol here. We have earnings on Friday, January 10th, before market open. The expected move here is greater than 13%. Now, this stock is hovering right around that $10 level. This stock last year had a horrible year last year. I believe this was a $50 stock during the year last year. Sold off all the way down here to that $10 range. And just today, it rallied pretty hard to upwards of getting to that $10 level. Now it's sold off down to $9.70. So we are expecting a move greater than 13% on Wallgreens, and that's what's being priced into the options, and that's what's telling us that that is the type of move that the market is expecting. All right, so let's take one more look at our list today, and we can see that we do have a handful of stocks, but really I like Calmaine as a quiet candidate tomorrow. I also will look at Albertsons and Jeffries. Jeffries is really one that I've traded with quite a bit of success. KB Home, Constellation Brands, Delta, like all those. All right. And then really Wednesday on the volatile stocks, we have Greenbrier, Helen of Troy, Franklin Covey, and Wallgreens. Those are the four that are really consistent movers. And we'll take a look at some of those next week. All right. So with that, we're kind of getting back in the swing of things here. So a decent week of earnings as we begin the first full week of trading for 2025. All right. So as we transition into looking at our trade, the last trade we did as we went into the holiday, let's talk about Nike for just a moment. All right. So that was the trade that we gave out on our last show before we went on break. Okay. So that was 3 weeks ago. And we took 2 weeks off over the Christmas holiday. And Nike was going to come out with earnings 3 days after that, after our show that day. And we were looking at this small little strangle here on Nike. All right. Now, you've heard me talk about earlier in the show about this concept of implied volatility. And one thing about on the straddle and strangle side, where we are buying premium instead of a net seller of premium, okay, we are buyers of premium on these straddles and strangles, that we need to pay attention to IV. So what happens is IV, if we do these out in front of the earnings announcement, sometimes we get this IV rush into the options and it makes them more expensive. All right. That's exactly what happened here on Nike, that within 2 days, we generated a profit of over 20% on this trade. And one of our general rules on doing straddles and strangles is if we can get a double digit, especially up over that 20% level on our money in just 2 days, or in this case, right before the earnings announcement, we'll take that trade off. So literally the day of earnings, before the earnings announcement, we had a almost $150 profit in our trade. That was a 23% return on risk. So there is no reason to get greedy, because what happens if Nike doesn't move through earnings? All right. So that would be $146 profit per straddle. All right. I know a lot of people are doing 10 contracts, 15, 20 contracts. All right. So yeah, it's a little bit of money, a nice little trade, but we're selling that high implied volatility before the earnings announcement. and that is how we profited on this Nike trade. All right, so what's up in store for us this week? Well, we have the same kind of potential option to do here. Our trade of the week this week is going to be on Walgreens Boots Alliance. Okay, WBA is the symbol here. Now, remember, Walgreens has earnings on Friday, so we have all this week to be in this trade. Now, the stock currently is trading at $9.71. Okay, I have this trade priced at $10. I'm doing the $10 straddle on this. Okay, what I would do is you can price out the strangle using the 950 puts and the $10 calls. Okay, you can price out that strangle since the stock's at 971 now, or you could do the $10 straddle, or you could do the $9.50 straddle. Okay, they're all three of those are going to be very affordable. These are nice, inexpensive trades. You can see here on the $10 straddle that is just a little over $100 per straddle. All right, so if you have just a small account, say $10,000, and you don't want to risk more than 5%, that would be $500. That would be 5 contracts for this particular trade. All right, so that is it for this week. I'm glad to be back. Remember to like and subscribe. We do it each and every week, talking about earnings and the expected moves of stocks. And before we go, I'd love for you to download our free guide that shows you how to do this stuff yourself. And that is at ewotrader.com/straddle. But I'll see you again next week. Everybody have a great trading week here as we begin the full first trading week of 2025. Take care.